Welcome to Hibiscus Petroleum's Financial Results webcast. This webcast presents an overview of the results reported as part of our quarterly financial report for the 3-month period ended 31st December 2018 and released earlier today. This webcast has been prepared by Hibiscus Petroleum Berhad, i.e. the company, solely for general information purposes only, and shall at all times be heard and or viewed together with the full quarterly report for the same period that is made available or published by the company on its website. This webcast may contain forward-looking statements which are based on current expectations, beliefs, and projections about future events or matters. By listening to and or viewing the webcast, you agree to the limitations and notifications set out in the disclaimer section of this webcast. Our presentation today comprises of 6 components. In Part 1, Uday Jayaram, our Vice President Corporate Development, will briefly introduce the company. In Part 2, Deepak Thakur, our UK JV Asset Manager and Group Petroleum Economist, will provide an overview and update on developments at our UK producing asset, the Anna-Surya Cluster. Deepak will also provide an overview of the recently acquired discovered oil fields offshore in the UK continental shelf in Part 3. In Part 4, Dr. Pascal Hoss, a co-founder of Hibiscus Petroleum Berhad and CEO of Sea Hibiscus Sendirian Berhad, will provide an overview of our North Sabah Malaysian producing asset. In Part 5, Yip Chi Yong, or CY, Vice President Finance and Group Controller, will present the financial highlights of the company's second quarter results. Uday will then conclude our presentation with some of our key messages for this quarter in Part 6. Should you have any queries, you may contact our Investor Relations team via the email address provided at the end of this presentation. I shall now hand you over to Uday.
Hello, this is Uday Jayaram. I am Vice President Corporate Development at Hibiscus Petroleum Berhad. Let me commence this presentation by providing you with a brief introduction to our company. Hibiscus Petroleum was listed on the main market of Bursa Malaysia in July 2011, with the vision to be a respected and valuable, pure-play, independent oil and gas exploration and production company. Our 2021 mission is to secure 100 million barrels of net proven and probable, or 2P, oil reserves and/or entitlement, and achieve a net oil production of about 20,000 barrels of oil per day from currently held assets or potential new ventures located in areas of our geographic focus. We have approximately 1.6 billion shares in issue, which are held by more than 12,000 shareholders, with our core management team owning the largest single block of shares in the company with a 10.6% holding. Corporate and institutional shareholders approximately hold a combined 51.6% interest in the company, while retail shareholders provide liquidity with circa 37.8% ownership. On the 14th of February 2019, our market capitalization stood at 1.7 billion ringgit. Our listed securities are Sharia compliant at this time, and since the 30th of November 2018, Hibiscus Petroleum has been included in the MSCI Global Small Cap Index, as well as the FTSE Bursa Malaysia Mid 70 Index in December 2018. Issued in March 2018 and set to expire in March 2021, we also have approximately 317 million warrants which are outstanding. The exercise price of these warrants is currently at 1 ringgit and will step up by 6 cents on the 20th of March 2019 and thereafter a further 6 cents on the 20th of March 2020. Today, our key activities are focused on efficiently monetizing our producing oil fields and growing our portfolio of development and production assets in areas of our geographical focus, which are the United Kingdom, Malaysia, and Australia. The company currently has 2 producing assets, the first being the Anna-Surya Cluster of oil and gas fields located in the UK North Sea, which we acquired about 2.5 years ago. Since our acquisition of this asset, the Anna-Surya Cluster has contributed significant positive cash flow and profits to our company, and over the second financial quarter, the Anna-Surya Cluster delivered an average of approximately 4,400 barrels of oil equivalent per day, net to our company. In addition to the Anasuria cluster, we became the operator of the 2011 North Sabah Enhanced Oil Recovery Production Sharing Contract, or PSC, on 31st March 2018. We have a 50% participating interest in this PSC, with the remaining 50% non-operated participating interest being held by Petronas Charigali, a wholly owned subsidiary of Petroleum Nasional Berhad, or Petronas, the national oil company of Malaysia. For our 50% participating interest in the North Sabah PSC, our estimated entitlement of daily oil production over the second financial quarter was approximately 5,000 barrels of oil per day. In summary, total oil and gas production rate across both assets averaged approximately 9,400 barrels of oil equivalent per day over the second financial quarter, of which oil production contributed 8,850 barrels per day. Within our current portfolio of assets, our total net proven and probable reserves as of 1st January 2019 stood at 50.7 million barrels of oil, while net contingent oil resources stood at 71 million barrels. Financially, our balance sheet is strengthening. As of 31st December 2018, our net assets stood at 1.2 billion ringgit and our unrestricted cash balance stood at 176 million ringgit. We also continue to operate without any debt. Our current portfolio, consisting of 1 exploration, 2 development and 2 producing assets, is spread across 3 continents. In Asia, we operate in Malaysia, and in Oceania, we operate in Australia. In Europe, we are present in the United Kingdom and have interests in several fields under concession agreement type arrangements. We jointly operate several fields in the Anasuria cluster, and in the near future we expect to be appointed exploration operator of blocks 15/13A and 15/13B, which include the Marigold and Sunflower discovered oil fields. Based on an independent assessment, the total net 2P oil reserves in the Anasuria cluster is 23.7 million barrels of oil as of 1st January 2019. In Malaysia, we operate 4 producing fields under the North Sabah PSC, which together contain net 2P oil reserves of 20.5 million barrels of oil. In Australia, under a concession type agreement, we have approximately 6.5 million barrels of 2P oil reserves located in the Vic L31 West Seahorse development asset, which we also operate. The future potential of each of our assets is further underpinned by volumes of oil which have been classified as contingent resources. In the United Kingdom, material contingent resources are located in the Marigold and Sunflower oil fields, in which we have a 50% interest. These 2 discovered oil fields contain 30 million barrels of 2C oil resources net to the company. Another 7.8 million barrels of 2C oil resources net to the company are located within the fields of the Anasuria cluster. In Malaysia, our net 2C oil resources in the North Sabah fields amounts to circa 31.7 million barrels of oil. In the months and years going forward, we intend to gradually convert these contingent resources into proved and probable reserves, thereby further enhancing the value of our asset base. Deepak will now take you through the details of our assets in the United Kingdom in parts 2 and 3 of this webcast.
Hello, I am Deepak Thakur. At Hibiscus Petroleum Berhad, I have 2 roles. I am the JV Asset Manager for the Anasuria cluster. In addition, I am also the Group Petroleum Economist. I will now take you through some information on our first producing asset, the Anasuria cluster, which is located offshore the United Kingdom. Our indirect wholly owned subsidiary Anasuria Hibiscus UK Limited, or AHUK, has been involved in the joint operations of the Anasuria asset for over 2 years. This asset is located about 175 kilometers east of Aberdeen in 94 meters of water and has been in production since 1996. Based on an independent reserves assessment and the assumptions contained therein, effective 1st January 2019, the estimated remaining economic life of the asset is up to 2038. Our interest in the Anasuria cluster comprises a 50% direct interest in the Teal, Teal South, Gilmore A and Kite fields. We jointly operate these fields together with our partner Pink Petroleum through a jointly owned legal entity incorporated in the United Kingdom called the Anasuria Operating Company. We generally refer to the Anasuria Operating Company as AOC. The cluster also includes the Cook field, and in this field we have a non-operated 19.3% interest. We also own a 50% direct interest in the Anasuria FPSO. Included as part of the Anasuria cluster are all components of the installed subsea production infrastructure and the Anasuria FPSO. Taking a closer look at the field layout, the subsea infrastructure underpinning the production of hydrocarbons is quite extensive and spans 25 kilometers from north to south. We utilize the services of Petrofac, a reputable international service provider, in the role of a duty holder for the offshore facilities and pipelines. Our joint operatorship of the Anasuria FPSO and management of operating costs through a risk-reward type arrangement with Petrofac are key drivers in keeping our unit production cost at competitive levels for this type of facility. The operating performance of Anasuria in the current quarter has generally strengthened when compared to the preceding financial quarter. The higher average uptime of 94% was attributed to a record 112 days of continuous oil production achieved in the current quarter. This, combined with the incremental production delivered by Gilmore P2 sidetrack well, which was drilled in the preceding quarter, has resulted in a 24% increase in the average oil and gas production rate to 4,416 barrels of oil equivalent per day net to our company. The improved production rate resulted in an overall decrease in OPEX per barrel of oil equivalent to approximately $15 in the current quarter. This is consistent with our strategy of reducing operating expenditure per barrel of oil produced through the execution of projects that enhance production and extract value from our asset. In the current quarter, we conducted one crude oil offtake. Approximately 274,000 barrels of oil were sold at the average realized oil price of $58.08 per barrel. Despite the decline in oil price relative to what has been realized in previous three offtakes, our achievement of low OPEX per barrel metric has allowed for sufficient headroom for this asset to continue to generate positive cash flow. In summary, we are pleased with our operating performance for this quarter. The projects identified on this slide have the common objective of taking us towards the target of delivering an average of 5,000 barrels per day net to Hibiscus Petroleum by the end of 2020 financial year. The Gilmore P2 sidetrack well, which was executed last year, has been contributing positively to the company since it commenced production in September 2018. In May 2018, we had approved an investment to undertake the Cook water injection project. This project entails the drilling of a well through which water would be injected to repressurize the Cook field. We expect the secondary recovery activity to arrest the natural decline of the Cook well, with the added achievement of delivering an improved recovery factor for the field. Engineering, planning, and procurement activities related to this project have commenced, with field activities being implemented by our operating partner in the Cook field, Ithaca Energy, over the course of 2019 calendar year. This project is progressing according to schedule, and the total net capital expenditure estimated for this project is 61 million ringgit. Of this amount, 6.1 million ringgit has been incurred in the first half of financial year 2019, 47.1 million ringgit is expected in the second half of financial year 2019, and a further 7.8 million ringgit is expected in financial year 2020. In addition, there are several drilling opportunities in the Gilmore A, Teal, and Teal South fields which can be drilled in calendar year 2019 and 2020. The subsurface evaluation work, which commenced in mid-2018, has matured, and an opportunity for the calendar year 2019 drilling program is being finalized for an investment decision. This is subject to the approval of our board as well as our joint venture partner, and further disclosures would be made as the project matures. I will now briefly take you through our recently acquired interest in the Block 1513A and 1513B development asset, also located in the United Kingdom. On 9th of October 2018, we announced that our indirect wholly owned subsidiary, Anasuria Hibiscus UK, had entered into a sell and purchase agreement with Caldera Petroleum Limited to acquire a 50% interest in the Block 1513A and 1513B, for a total purchase consideration of $37.5 million US. The blocks are located offshore in the UK sector of the North Sea, approximately 250 km northeast of Aberdeen, in 140 meters water depth. Block 1513A consists of a significant oil-bearing discovered field to be called Marigold, whilst Block 1513B, which lies northeast of Block 1513A, consists of a smaller discovered field to be called Sunflower. Based on an independent report by AGR Tracks International Limited, the gross 2C contingent oil resources in the blocks are estimated to be 60 million barrels of oil. As we have 50% interest in the blocks, this translates to a 30 million barrel of 2C contingent oil resources net to Hibiscus Petroleum. On 16th October 2018, subsequent to receiving all material regulatory approvals, this transaction was completed. This acquisition presented an opportunity for us to expand our footprint in an area of our geographic interest and is consistent with our 2021 mission. Having conducted some benchmarking exercise, we believe that the acquisition cost per discovered barrel of oil was very attractive, and we anticipate that the value added to our portfolio through this transaction will gradually grow as we mature the field development plan. In addition, given that production from the Anasuria cluster generates taxable profits, we believe that the development of these newly acquired fields may provide us with an opportunity to optimize our tax position whilst accreting value to our stakeholders through the addition of production. We have also identified several stranded discoveries around these fields. We believe that the potential collaboration with concession owners of these stranded discoveries located around these blocks is feasible and will allow a reduction in overall unit development cost for all parties. Since the completion of the transaction, we have established a dedicated project team in Kuala Lumpur. The project team has been tasked to conduct the subsurface field development and engineering studies, as well as, with the support of Petrofac, execute the concept select phase as part of the efforts to establish a field development plan for Marigold and Sunflower. The concept select phase is targeted to complete in mid-2019, and the development concepts being considered includes fixed platform, floating solutions, as well as tieback to existing nearby infrastructure solutions. I will now hand you over to Pascal to provide a business overview of our Malaysian North Sabah operations.
Hello, I am Pascal Hos. I'm a co-founder of Hibiscus Petroleum Berhad, and I'm also the CEO of Sea Hibiscus Sendirian Berhad. Sea Hibiscus Sendirian Berhad is the holder of a 50% participating interest in the 2011 North Sabah Enhanced Oil Recovery Production Sharing Contract, or PSC. We're also operator of this PSC. The remaining 50% participating interest is held by Petronas Carigali Sendirian Berhad. This is our first PSC in Malaysia, and participating interest in this PSC was acquired through a transaction with the Shell Group that was successfully completed on the 31st of March 2018. The North Sabah PSC has delivered production since 1979, and our production rights under the PSC continue until 2040. Through the PSC and the joint operating agreement signed with our partner Petronas Carigali, we have a 50% participating interest and operatorship of 4 producing oil fields offshore Sabah, Malaysia, namely St. Joseph, South Furious, SF30, and Barton. We also have the operatorship of the Labuan Crude Oil Terminal and all other equipment and assets related to the PSC. As reported by an independent technical valuer, Risk Advisory, and based on our participating interests, the net 2P oil reserves of the fields under this PSC is 20.5 million barrels as of 1st January 2019 through to the end of the PSC life in 2040. Risk Advisory had also estimated that the 2C contingent oil resources in the fields covered by this PSC, based on our net entitlement, is 31.7 million barrels. Thus, we believe this asset holds a great deal of future potential. Subject to oil price and regulatory approvals, we hope to be able to allocate capital and our technical capabilities towards unlocking the available 2C contingent resources. The table on this slide shows the operational performance of the North Sabah asset over the past 4 quarters. That is, from the 1st of January 2018 to the 31st December 2018. To note, between the 1st of January 2018 to the 31st of March 2018, Shell was operating the North Sabah asset on behalf of C. Hibiscus. During the current quarter, North Sabah production facilities recorded a lower average uptime of 85%, which was mainly due to plant maintenance activities performed at the offshore platforms. This adversely impacted average oil production rates, resulting in a decrease of approximately 10% when compared to the preceding quarter. The plant maintenance activities also resulted in higher levels of operating expenditure, or OPEX, incurred during the current quarter. On the back of lower production rates and higher OPEX, the average OPEX per barrel for North Sabah increased to $22.74 per barrel. As the plant maintenance campaign was completed within the current quarter, the OPEX per barrel is now projected to reduce in the next financial quarter. We conducted one crude oil offtake from the North Sabah asset in the current quarter. A cargo of approximately 293,000 barrels of oil was sold at the realized oil price of $71.3 per barrel. Overall, we continue to work towards aggressive production targets. In addition, we are continuously pursuing cost reduction opportunities without compromising the high health and safety standards that are expected in our industry. In August 2018, Petronas approved the St. Joseph infill drilling project through the Milestone Review 4 maturation process. As part of the project maturation process, Petronas subsequently approved the field development plan in December 2018. This project entails the drilling of 3 infill producer wells, utilizing a triple splitter wellhead from the St. Joseph Jacket A platform. There will also be a requirement for minimal topside facilities modification. From an expected life of field reserves of 2.8 million stock tank barrels, this project is expected to add approximately 2,600 barrels of oil per day, gross, at its peak production. The total gross capital committed to this project is anticipated to be approximately 142.6 million ringgit. This will be shared equally with our joint venture partner. We anticipate that drilling will commence in April 2019, and we are targeting for first oil production in June 2019. Finally, we are also working towards obtaining Petronas approval for the SF30 infill drilling project. This project will approach the Milestone Review 4 stage in the next financial quarter. These projects are consistent with the group's strategy to convert contingent resources within the North Sabah asset into producible reserves, thus unlocking economic value from these fields. I will now pass you on to CY, who will take you through the financials of the group for the current quarter.
Hi, I'm CY, Vice President of Finance and Group Controller, and I will take you through the financial highlights for the current quarter. The current quarter represents the third quarter that actual North Sabah business performance data under the operatorship of C. Hibiscus is being reported for detailed analysis. Earnings before interest, taxes, depreciation and amortization, or EBITDA, for the North Sabah asset is reported at approximately 38 million ringgit for the current quarter. The EBITDA margin for the current quarter decreased to 43% from 53% in the previous quarter. This decrease was mainly due to an increase in operating costs, resulting from the conduct of planned maintenance activities performed at the offshore platforms, which commenced and were duly completed during the current quarter. Net tax charge for North Sabah in the current quarter amounted to approximately 4 million ringgit, resulting in a profit after tax for the North Sabah segment of 13 million ringgit. Turning to the Anasuria segment, EBITDA for this asset was approximately 65 million ringgit, driven by the sale of one oil cargo offtake comprising approximately 274,000 barrels of crude oil sold. For the current quarter, Anasuria recorded a net tax credit of 2 million ringgit, largely due to the reversal of deferred tax liabilities previously recognized, which amounted to 8 million ringgit. We wish to emphasize that in the United Kingdom, when there is high expenditure in relation to capital projects, deferred tax charge, which is non-cash, will be relatively high. However, UK tax regulations grant us immediate income tax relief equivalent to the total capital expenditure against taxable income. For the current quarter, profit after tax delivered by the Anasuria segment amounted to approximately 43 million ringgit from the sale of one offtake. Whilst profits are extremely important, management's focus remains on delivering strong and sustainable EBITDA levels as long-term business continuity is of the highest priority. Our business performance is underpinned by several factors, predominantly the price of the Brent crude oil benchmark at approximately the time of a scheduled offtake from our crude oil storage facilities. Given that oil price is affected by global macroeconomic factors which are not within the control of the company, focus is placed on the operational performance of the assets, such as production rates and facilities availability, as well as the management of operational expenses. A key metric that we utilize to track our operational performance is average unit production cost. The average unit production cost for both the Anasura cluster and the North Sabah PSC are well below the average realized oil price achieved in the respective quarters. As shown in slide 20, we have seen oil prices much lower and higher than current crude price levels, and we have managed on all occasions to remain profitable. The careful management of costs to maintain low operational expenditure and the delivery of production enhancement projects are key towards obtaining a low unit production cost structure, which is a significant contributor towards our profitability. We wish to reiterate that management's focus remains on delivering strong and sustainable EBITDA levels as long-term business continuity is of the highest priority. The group operates two producing assets in two countries. The tax structure in the oil and gas exploration and production sector for each of these countries differ. In Malaysia, the tax regime under which Malaysian oil and gas activities are governed is the Petroleum Income Tax Act 1967, also known as PITA. The provisions of PITA are applied to net taxable petroleum income at the rate of 38%. In the UK, the total tax rate for AHUK is 40%, which consists of a ring-fence corporation tax and a supplementary charge at 30% and 10% respectively. Any capital expenditure in the UK is fully deductible from both taxes in the same financial year that they have been incurred, leading to a reduced amount of tax payable for that year. Simultaneously, deferred tax liabilities, which are treated as an expense to the profit and loss account, are recognized in the same financial year. Such deferred tax liabilities are non-cash in nature. To reiterate, in the UK, capital expenditure incurred in a financial year provides the benefit of immediately reducing tax payable within that same financial year. The capital expenditure is also expected to lead to production enhancement in future years. Over the past few quarters, our balance sheet has been gradually strengthening, more so with the introduction of the North Sabah asset as part of the group's overall business portfolio. We have built our total assets to approximately 2.2 billion ringgit, and shareholders' funds stand at about 1.2 billion ringgit. Year on year, total assets have increased by 70% and shareholders' funds have increased by 49%. Net assets per share currently stand at 73 cents. In addition, as at 31st December 2018, the group's unrestricted cash balance is at a healthy 176 million ringgit. A reduction seen in our cash balance when compared to the previous quarter is largely attributable to the group's acquisition of the Marigold and Sunflower discovered oil fields in the United Kingdom for $37.5 million in cash. The restricted cash recorded in our results relate to a security for our portion of the estimated cost of decommissioning the facilities of the Anasuria cluster. In this regard, we are required to periodically place monies into a trust, and this commenced 18 months after the completion date of the Anasuria cluster acquisition. This activity will continue until such time that the security has been fully provided. As of 31st December 2018, a sum of 27.5 million ringgit has been deposited with a UK trustee to support our ongoing obligations in this area. To note, the group remains debt-free as all our activities and acquisitions to date have been funded with equity and internally generated funds. Over the next 6 months, we anticipate that we shall undertake certain capital raising initiatives to ensure that the projects and opportunities we have in hand, which are expected to enhance production and create value, may be executed smoothly. We are evaluating our options bearing in mind factors such as long-term capital requirements, the overall weighted average cost of capital, as well as benefits to the group to maintain a certain level of agility and financial flexibility amongst others. As our plans mature, we shall make the relevant disclosures. Before we wrap up, I would like to hand over to Uday to highlight a few takeaway points.
Hello again. I would like to close this presentation with some key messages. At the group level, we continue to focus on delivering results for the current financial year ending 30th June 2019 or financial year 2019. Our goal is to deliver 2.7 to 3 million barrels of oil from our two producing assets in the financial year 2019. We have sold approximately 1.7 million barrels of crude oil across both assets in the first 2 quarters of this financial year, with 3 offtakes coming from Anasuria and a further 3 offtakes coming from North Sabah. As of the date of this report, a further 2 cargoes were sold in the 3rd quarter of this financial year. If we're able to maintain production momentum across both assets, we hope to be able to deliver on our goal of 2.7 to 3 million barrels in the financial year 2019. We also aim to ensure that unit production costs in Anasuria and North Sabah continue to be at levels that allow a continued healthy EBITDA, despite recent oil price volatilities. Our focus has also been to deliver our 2021 mission, as part of our efforts to enhance shareholder value and ensure business sustainability. Currently, the group's total net oil production rate is approximately 8,850 barrels per day. We anticipate the gap towards achieving our 2021 mission will be closed by developing identified opportunities which are being progressed within the assets that are in our portfolio. Our asset teams at both Anasuria and North Sabah are targeting to execute production enhancement projects that could potentially enhance our net production to over 12,000 barrels of oil per day by 2021. Additionally, we have put in place a project team to evaluate options to develop the Marigold and Sunflower discovered oil fields. These discovered oil fields, which consist of an estimated 30 million barrels of net 2C oil resources, hold significant potential to drive future earnings growth once these fields commence production. We also continuously look for opportunities to grow our asset base in order to achieve our 2021 mission. We are excited by the activities that lay ahead for Hibiscus Petroleum and hope all these developments will act as positive, value-enhancing triggers for all our shareholders.
And that's all we have for this quarterly earnings webcast. Thank you for tuning in.